Zoeb here from OneGlanceTrader.com and welcome to episode 2 of my trading journal, The Drawdown Manager. Now in this episode what I want to do is go through my actual trading strategy that the automated system actually goes into. But before I do that, I just want to give a quick update on the health, on the status of the account. So for those, I haven't actually uploaded episode 1 onto YouTube yet. So if I go back to episode 1, which was recorded yesterday on the 4th of December, we are on the 5th of December today, so obviously the next day. So this video, when I look at the status of the account, so really the two real key metrics I really want to be looking at is drawdown and equity. So drawdown was at 306, so just writing it down, £306, and the equity was on 568.88. So now if we close this down, zoom across now to the account live, you can see that drawdowns now decreased down to £292, which is fantastic. And the overall equity has actually gone up by 78, 88, nearly £20. As that's because the balance has also gone up as well, because we've obviously closed out a lot of trades inside profit. So as time goes on, I'll come up with a better system, the way to track it, so you guys can see the evolution over time. But for now, just want to give you an update on where we are. So it seems a bit positive where we are. Drawdown's going to go up and down throughout the system, and as I go further down the episodes, I'll be introducing my discretionary way that I'm going to trade, trying to reduce down the drawdown. At the moment, I'm still refining what method I'm going to use on the higher time frames. But for now, I'm just letting the system trade and just letting the trades sort themselves out. And then we'll go into more detail about looking at these larger, disgusting open trades and what we can do to kind of close those out, either by trading on higher time frames in a discretionary manner, or using the profit that we've accumulated over the past few days to close out some of this stuff here on there. So for those who haven't seen episode 1, start the account on around the £800 mark. So we've got about £79 to play with in terms of, look, if I wanted to close this trade out now, I potentially could. And reduce the drawdown, bring margin back into my account to make me trade for another day. But at the moment, I think I'm okay. Margin level's still looking fine on there for now. So nothing really to panic about at the moment. But the key thing is it is making money every day, which is the bit I like to see, and just need to reduce some of this stuff here. But we'll look at that at future episodes. So what is the system that I'm trading? So it's a combination of price actions in terms of candlestick formations, and also the Bollinger Band and volume. So the way the system works is it looks for 3 bars, either red bars or green bars, that where at least one of the 3 bars has touched the Bollinger Band. So let me take that a step back. Actually, let me just take that step back. So this is a trend trading system that looks to capture momentum within the trend, and the way it does that is that it looks for 3 consecutive bars of the same color, or bearish or bullish or green, where at least one of the bars has touched the Bollinger Band. So here's an example here. So at the moment we've got a consecutive 1, 2, 3, 4, 5, 6 bars. But what it does, it checks the last 3 bars and waits for a bar to touch a Bollinger Band. So here, these 3 bars would be in play at the moment, assuming none of this price action exists, because this bar touched the Bollinger Band. Then what it does, it then waits for a candle in the opposite color to form. So in this case, a bullish bar. So note red again. So now these 3 now become the next 3 candles. They wait for the next candle to close. There we go. Now these 3 bars become the next candle, and there you go. And there you have your green candlestick that is formed. Now what happens here is, for this green candle to be valid, the volume needs to be less than the previous bar. Now, I'll be honest, I can't remember why I've added this in. There was some logic, some forums, some posts that I read around adding in volume data into this, but when you see the green bar, the volume has to be less than the previous bar. I'll try to remember at some point why I've done it that way, but for that to be a valid signal. So in this scenario, volume is less than the previous bar. So what it does, it places in this case, a sell stop order 2 pips below the low of the last red bar. Sorry about that, I'm just confusing myself there. So I don't know where 2 pips is, but I'm just going to assume it's about here somewhere. So it places this bar here, so a sell stop. And in the actual EA, you can set this to 1 pip, 5 pips, 0 pips. So you can set your threshold range as long as you want. I've set it at 2 pips for the system because that seems to work best on the backtest. And then what it does, it then waits. It waits to be triggered. Now it only stays open for a maximum of 5 bars. Or I think it's 4. 4 or 5 bars. I'm going to go with 4. I'm pretty sure it's 4. 4 bars. So this is bar 1, this is bar 2, this is bar 3, this is bar 4. So you can see that on bar 3, it activates the trade. And then I have a take profit target of 5 pips, which I'm just going to assume is here for a second because I don't know where 5 pips is for now. And as you can see, it makes it. It was actually 18 pips. 5 pips is about here somewhere. Delete that one there. And that's basically what it does. Now, as I mentioned before in episode 1, there is no stop loss. So this trade can, not even get there, and it could just go all the way. Now, when I first designed the system, it literally just took the trade on the close of this bar. So it literally took the trade there. Now, in this case, it worked out quite nicely. On the buy trade. What I found is part that it literally opens and then it just literally goes in the opposite direction and never gets to this level. So let's now follow it along. Let's just do the route there. So this is another 3-bar formation. It is again green bar, lower than that, so it sets a buy stop order 2 pips below the low. 1, 2, 3 gets activated, and then you'll make your 5 pips there. So that works there. And then again, now you've got another 3. Again, another one of the low. Another 3 bars. But this bar here has higher volume than the previous bar, so this green bar here. So it doesn't activate the trade. Keeps going, keeps going. Okay, now you've got 1, 2, 3. That third bar is in this 3 parts hit the thing there. But we've got another red candle. So 1, 2, 3. And this one, there you go. So here you go. Here it activates over here on this bar. So what it does now is we'll take it of the low of the 3. So it'll put a pending order two pips below here. Let's just assume that's 2 pips for a second. Then it waits 5 candles. 1. So this is the trigger. This is the trigger candle. Well, the signal candle. 1, 2, 3, 4, 5. As soon as it gets to 5, this will then disappear. Yeah, and will no longer take that trade. So if I show you where I'm at the moment, I don't actually have any buy stops. So if I go to account history, so here you go. Here's examples of all these sell stops and buy stops being placed, but were not triggered within 5 bars, so have been cancelled. And that's pretty much the system. It's very simple on there. Now, as you can see in this scenario here, in this massive downtrend, there was an opportunity to claim a lot more than 5 points. So I'm working on ways on, how I can stay in the trade for longer. So I can try capture more of this in there, because again, I'm not using a stop loss and trying to protect myself. So what I could do is, once it gets to 5, move to break even and try get to 10. Something on those lines maybe. I'm still working it out, so if you guys have got any views on how to make this better, then please let me know. So if I just carry on, just show you a few more examples, just waiting for 3 bars. There you go. So here's another one. 3 bars green, lower, volume is lower than the previous bar, sets it, I don't know, say 2 pips there. 1, 2, 3, 4, 5. It may or may not got triggered, but even if it did, boom, there you go. Let's move this out of the way. 1, 2, 3. Let's now do this. So it's another one. 1, 2, 3. Volume is higher, so ignored. 1, 2, 3. 1, 2, 3. Volume is higher, so ignored. 1, 2, 3. Volume is higher, so ignored. 1, 2, 3, 4. Volume is higher, so ignored. Quite annoying, really. Maybe I should remove the volume one. 1, 2, 3. Here you go. Here's a good. So here's one that could potentially go wrong here. So you got your 1, 2, 3. Volume is lower. Let me actually see where 2 pips actually is of this high. It's about there. Okay. So 2 pips was about here ish. And then so it gets triggered. 1, 2 gets triggered. And you make your 5 pips there out of 14, and then does the same. And that's all the strategy is. It's nothing more complicated than that, really. The only downside to using pending orders is that you will be triggered at whatever spread that is there. So sometimes the spread could be like 5 pips or 4 pips or something like that. So to make your 5 pip profit target, you've got to make 9 pips, where the pair may not move 9 pips to get that in there. So that's something just to bear in mind with this system. But as it stands, that's the basic element. There are some other higher time frame filters in the EA, and using ATR or minimum ATR and things like that, but I've not included that in the system I'm trading at the moment. So what I'll probably do is, inside episode 3, I'll probably take you into the actual EA and show you the settings that are in there and show what you can customize, and maybe in later episodes we can do some back testing to see if we can find something that's a bit more optimal to be using. But hope you enjoyed this episode. Please provide your comments, and it seems like a better day than it was. That's the wrong one. It seems like a better day than we were yesterday. That nearly £20 up equity than when we were inside episode 1. So hope you've enjoyed that, guys, and I'll speak to you soon.